Today we're talking about our dividend investment strategy for 2022. FIRE is just around the corner in 2024, and we're going to be funding that journey with dividend income. So today we're going to go over how much we received in January 2022.
At the beginning of 2022, we did share our goals for 2022. And one of the goals is, of course, dividend investing, where we wanted to achieve $25,000 in dividend income. Personal finance is personal, and we are not financial advisors. All that we are doing is sharing our journey to financial independence.
And you might wonder how we're investing our money. We consider ourselves hybrid investors. That means that we're investing not only in Canadian dividend paying stocks and other stocks, also ETFs and real estate, both here in Canada and abroad. So if you stick to the end of the video, we're going to share with you sort of a new little breakdown of who's paying us, what sectors are paying us, and where we're expecting to receive that $25,000 this year.
And not only that, but also the lessons that we have learned investing in 2021 and 2022.
So let's get right to the dividends and who paid us in January of 2022. The first one we're going to talk about is TELUS. It's a telecom company, again, here in Canada. We received $327.40 from TELUS, and we currently hold 1,000 shares.
We also received dividends from Bell Canada, another telecom institution. Here we received $302.75, and as of today we own 346 shares.
And moving right along, Algonquin is the next one on our list. It's a utilities company. We received $292.67, and we currently own 1,389 shares.
Banks are always, we love banks here in Canada, and the first one that paid us dividends is TD Canada. We have received from TD $943.40, and as of today, 1,006 shares.
Yeah, this is the first dividend increase or dividend payment since the banks increased their dividend payments. So this is exciting for us.
If you have not subscribed yet, there is going to be a great opportunity, because next month we are going to pay, we are going to receive dividends from maybe BMO.
I'm not sure who pays
I guess
us next
it's BMO.
Is it BMO?
I don't know.
But they're all paying soon, so we'll see. See how it all works out.
Subscribe and hit the notifications button.
Yeah. The next one is a REIT. It's RioCan. Again, that's here in Canada. It paid a distribution to us of $26.96, and currently we have 337 units.
We also received distributions from XAW. XAW is an ETF in Canada from BlackRock. The ticker symbol is XAW.TO. We received $95.77, and as of today, we own 236 shares. We are gonna say maybe bye to XAW and see you soon, because they only pay twice a year. So the next time that you're gonna be receiving distributions from XAW, it will be in the second semester. So
yeah, but we're not holding that one for its distributions or its payouts. That one is hopefully a growth play for us.
That is correct. See, it didn't take that long for you to stick around. Thank you very much. That's really nice of you. Don't forget, if you like this video so far, smash the like button. And you might say, he keeps saying that. Yes, because we need it. We need to share what we have learned with other folks also interested in becoming financially independent.
So we're going to do it a little bit different this time. We're going to look at individual sectors and how they're paying us out. So the first sector we're going to look at is the telecom sector. If you look at the amount that we received in January, currently we've been paid $630.15 from this particular area. The next one is utilities, and we received $292.67. Moving on to financials, currently it's $943.40. From the REITs, we received $26.96, and ETFs, $95.77.
So when we think of these distributions and this asset allocation, what we are trying to do is to diversify our investments. Thinking of that, we received if you think about only the Canadian stocks, we have received just over 1,800, which is around 95% of our dividend for January 2022, and global $50.32, which is around 5% of our asset allocation. If we sum everything up, we have received in January 2022 $1,988.15, which is around 8% of our goals.
So a few of the interesting facts about some of the dividends and distributions we received this past month is that RioCan is now starting to drip 1 new unit per payout. So every time we receive distributions from RioCan, we're actually able to get 1 further unit. So when we compare January of 2021 with January 2022, you're going to notice that there's actually a very significant increase in the amount of dividends that we received. It's actually about 61% more. And this is in spite of the fact that we actually sold out of a few of our higher paying positions last year with QILD. So just over the course of the year, with dividend increases and reinvesting our money back into these stocks, we've seen a substantial increase in our dividend payout.
If you are new to investing in Canada, not only in Canada, across the globe, there are a few tips that we wanted to share with you. The first one is you have to invest regularly, and that's what we have been doing. Every time that we have an opportunity, every money that we have extra, we are investing that amount.
And to keep it simple, last year, if you look back at those videos, you're going to notice that we had numerous different positions, different companies that we were invested in. I think in January there was 9 of them. Now we're down to 6. We're just simplifying and streamlining our portfolio. It makes it easier for us to manage and just keep track of everything.
Something else that we are also doing is switching some of our accounts. For example, we open an account with Wealthsimple Trade, and thanks to you. And what we are doing is switching some of the positions, some of the accounts that we have to Wealthsimple, because first of all, we are not paying any commission fees. Just as an example, I guess it's around $125 that we paid on TFSA only. So as you know, TFSA here in Canada is a tax-free savings account. Even though it was free, it doesn't make any point to pay a commission fee to buy those stocks. That's why we are learning as we go, and on this case, removing the commission fee from the other brokers that we use.
So the last thing that we wanted to talk about is just so that you're aware of the stock market going up and down. With us and receiving dividends from the majority of our investments, we're able to, if we were reaching retirement or when we reach retirement, are going to use those dividends to pay for that. We're not actually going to touch any of the capital investments. So if the stock price goes up or down, it's not as important to us, as long as that company continues to pay the dividend. If you're relying on ETFs to fuel your retirement, you're going to be subject much more to that up and down of the stock market, because those ETF prices are also going to fluctuate up and down. If you had to withdraw money at the end of this year, you're going to have been withdrawing when the ETFs are at a low point. Just something to keep in mind.
And don't get us wrong, we also have ETFs as part of our asset allocation. But the diversification that we have in our portfolio allows us to basically decide what is going to be the amount that we might be taking out from the dividends and also from the ETFs, from the distributions that you're going to pay us.
So we had a pretty good month in January. We're well up from where we were last year, and we just wanted to share that with you guys. Dividend investing is our way of paying for fire. So we're going to keep going.
Is there anything else that you think it's important to take into consideration that we did not mention in this video? Please use the comments below and share with us, and we are learning with you as we go. We wanted to say thanks again for your support. Thanks for coming along with us, and we are very grateful to be part of your journey as well.
Take care, guys.
Stay safe.
Bye.
Bye. Not only that, there is always, and not only that, what 1,000? Yeah, that's right. Yeah, you're right.
That's what she says. Next one is a REIT. It's what's it called?
What is the strategy that we have for 2021? And not only that, yeah.
damn new year gets us every time.